Hi, welcome to Slay the Spider. I'm Jim B, and I'm the creator and host of Slay the Spider. Shares of the S&P 500 are called S&P Depository Receipts, SPDRs. Spiders. Slay the Spider means I intend to beat the S&P 500 quite substantially. For the week ending November 18th, the markets had a bad week. In healthcare, biomedical, healthcare, and drugs declined. In media communications, internet and telephones declined. Media was unchanged. In technology, semiconductors and software declined. Electronics declined and crossed to the bear side. And computers declined. In consumer discretionary, gaming, restaurants, leisure, and household products all declined. On the bear side, retail and autos declined. In the financials, on the bull side, banks, insurance, and S&Ls declined. Finance was unchanged. On the bear side, Wall Street and real estate declined. In the industrials, building products, steel, chemicals, machinery tools, aero defense, and waste management all declined. On the bear side, metals declined. In the others group, oil, protection and safety, and forest products declined. Oil services was unchanged. On the bear side, textiles, transports, and business products declined. Gas utilities were unchanged. Electric utilities, foods, and precious metals declined. For the week ending November 18th, there were 3 sectors that were unchanged. No sectors advanced and 37 sectors declined. One sector, electronics, crossed to the bear side. 23 sectors are now on the bull side and 17 on the bear side. Overall, our market score changed from 55 to 51. For the week ending November 18th, the S&P 500 closed at 3965, down just 28 points for the week, or about 2/3 of 1%. The Dow closed at 33,745, down a whopping 3 points, or 0.01%. NASDAQ closed at 11,146, down 177 points, or just over 1.5%. This week, 30 stocks went from buy signals to sell signals. We had 4 new issues, 40% of stocks around buy signals and 60% around sell signals. Overall, the market score last week was 55. This week, it's 51. For the first 46 weeks of 2022, the S&P 500 has lost 16.8%, NASDAQ's lost 28.7%, and energy is up 62.7% and is the best performing sector. For the other sectors for the first 46 weeks of 2022, healthcare is down 4.5%. Media communications is the worst performing sector, down 36.1% for the year. Technology is down 24.1%. Consumer discretionary stocks have lost 31.3%. The financial stocks are down 10.17% for the year. The industrials have lost 6.7% for the year. Real estate is down 27.5%, and basic materials are down 12.3%. For the past week, the S&P 500 was down 0.6%, and NASDAQ lost 1.5%. The energy sector was down 1.8%, Healthcare was up 1.1% this week and the best performing sector. Media communications lost 1%. Technology was down 0.8%. Consumer discretionary stocks lost 2.8%, and they were the worst performing sector again. Financials lost 1.5% this week. The industrials were down 0.1%, a whopping 0.1%. Real estate lost 1.8%, and basic materials were down 1.6%. For the week, the 10-year Treasury bond yields ended at 3.818%, up 0.3 basis point for the week. West Texas Intermediate crude oil closed at $80.11, down $8.85 this week, or 9.9%. That was primarily due to the fact that the Chinese are shutting down again for COVID and canceled quite a bit of oil contracts with the Middle East, so that's the reason for the big drop. West Texas Intermediate on the 3-month trend is down $10.66, or 11.7%. Most of that occurred this week. WTI is up 5.8% in 2022 and is 16% below the day before the Russian invasion. This week, the wholesale gasoline, RBOB, closed at $2.42. It was down 19 cents, or 7.32%, and that was related to the excess oil in the Middle East due to Chinese cancellations. The 3-month trend, wholesale gasoline, is down 60 cents, or 19.8% over the last 3 months. Year to date, wholesale gasoline opened the year at $2.24. It's now $2.42, so it's up 8% year to date. Natural gas this week closed at $6.37.1. It was up 49.2 cents for the week, or up 8.37%. The 3-month trend for natural gas is it's down $2.96, over 31.8% over the last 3 months. Year to date, it's up from $3.70 to $6.37, which is up 72.2% year to date. Here's the Biden era chart comparing crude oil, wholesale gasoline, natural gas, and 10-year bond yields. Crude is up 56%, gasoline is up 58%, natural gas is up 105% as we go into winter. 10-year bond yields are up more than 255% since Biden's inauguration. Crude and wholesale gasoline are very slightly below where it was the day before the Russian invasion on February 24th. Subscriptions are available for $12 a month on an annual contract or $15 a month on a month-to-month contract. I've been producing the Slay the Spider Circle since 1998 and using it to manage private client assets. I've been nearly completely out of stocks for the past year. My portfolio performance is now well ahead of the S&P 500 and NASDAQ indices since I went into cash. That's the total idea behind Slay the Spider. Outperform the indexes in both up and down markets. Now is an excellent example of with cash beating the market substantially. I'm looking forward to buying many of the stocks I owned previously at prices well below what I sold them for last year. I will then own more shares going forward, in some cases twice as many. Sure, there were a few stocks I wish I had kept, but in total, I'm more than happy avoiding this bear market.